Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a comparison between SBI Life and HDFC Life and understand how SBI Life stock is, how good it is, and whether you should invest or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. So about SBI Life, this company was established in 2000 and they provide life insurance services all across India and is backed by the SBI brand and the largest India, you can say, brand bank, which is SBI Bank. It holds one of the largest AUM from retail clients along with HDFC Life and LIC. It is one of the largest, not quite the largest, and has been quickly making a mark in this space. The stock has gone up around 38% from its IPO price. Now, this would not look huge in front of how HDFC Life or other life insurance company or AMC companies have done. And I'll make you understand why that has happened. So if you look at the financials of the company, the sales was, and this is Q1, so June quarter numbers I have taken because I could not understand the September quarter numbers that well because of the variation in sales. So I've taken the first quarter FY20 numbers, and the sales were up just about 6.5%, whereas the profit growth was just about 5.5% on on a standalone basis. The debt of the company is zero, as with other companies, as with HDFC Life, with whom I'm going to compare this company to. The return on equity is around 18%, whereas the operating profit margin is around 4%. So not a lot to write home about in terms of the financials, but the brand itself is so huge that it is having a premierization effect, and the stock is trading at 60-70 times. So if you look at HDFC Life and SBI Life, both companies are really good, and but SBI Bank has many NPAs. So what I'm trying to make you understand is, in terms of HDFC Bank, although HDFC Bank's business and HDFC Life Insurance business is separate, similarly SBI's banks and life insurance business is separate, but the company is same, the brand is same, and the management is virtually the same as it is being backed. So if there is a problem with the SBI bank's NPAs or the loans that they have given to big corporates all across India, then it's going to affect their life insurance business. Not quite directly, but over a period of time, it may, because the company may start putting in money from their life insurance business to the banks, and so on and so forth. Although SBI in all sense has been backed by the government and they get government incentives, bailout packages, and so on and so forth, but I still believe a brand like HDFC with a very low rate of debt and with very low NPA ratios, probably the lowest in the banking industry here in India, would go a long way in doing well over a period of time compared to SBI Life. And we have seen that happen in terms of the valuation being given to HDFC Life Insurance compared to SBI, and the way the stock has moved comparatively to SBI Life. So better growth has been shown by SBI Life. This is my second point, and this is not in terms of the stock, but in terms of the profitability, because the profitability of HDFC Life Insurance has grown by around 18-20% continuously year on year, or even more. And if we look at the return ratios, the return on equity for HDFC Life Insurance, it is around 24.5%, whereas for SBI Life, as I have just shown, the ROE is around 17-18%. So there's a huge difference of around 660 basis points in terms of the return ratio. And this is extremely important to understand, because over a period of time, what we have seen that private financials have been taking market share from the government funds. And if we take into consideration a 660 basis points divide between both the life insurance company, and the fact that probably 0.5%, 0.3% of their business is being taken by HDFC Life, then overall effect of combined of these two would be huge over a period of 4 to 5 years, and you'll see that where HDFC Life will stand 5 years down the line. When you are investing in such companies like life insurance or any general insurance companies, pharmaceuticals, or any company where the gestation period is huge, where you need approvals from foreign, you can say, FDAs, or you need companies to build a portfolio over a longer period of time where they get earnings over an SIP, then you have to invest over 10, 12, 15 years. And I'm looking at 10 years down the line. I'm seeing similar to what HDFC Bank has done over the last 15, 18 years. A similar thing might happen in the life insurance business, where the private sector would take in more business from the government sector. So that you need to take into consideration as well. Although some points in favor of SBI Life would be the high promoter and institutional holding in SBI Life. Currently, it is nearly 98% or so, with the promoter holding being around 70 to 73%, around 25-26% holding of FIIs and DIIs. That means that only 2% to 3% of the holding is with the retail players. So very less chance of the stock falling a lot. But that then at the same time you have a decent promoter and FII holding in HDFC Life as well. So not quite a point in which you would change your decision of buying a particular stock. Um, Also, SBI, with the backing from the government in terms of incentives and bailout packages, do not seem like going down the hill or going in sinking in a precariously, you could say, a crisis situation. But HDFC may, although HDFC currently has a very good cash reserve ratio and cash reserves in their books compared to any other bank. So, in that regard, it is also safe enough to invest. If you look at the valuations and the technicals, currently SBI Life is trading at 70 times earnings, and it also trades at 65 times sales, so slightly cheaper than HDFC Life. But then again, there are points that I have already mentioned, that why HDFC Life would be trading at such expensive valuation compared to SBI Life. 13 times book value compared to 20 times book value for HDFC Life. 80 times sales is what HDFC Life is, I guess, trading at. And there's strong support between 780 to 820 levels for those who want to trade or trade for around 6 months or so. The 50 DMA of the stock is at 942, so it has just moved above that, while the 200 DMA is close to 765. So very expensive valuation. That's what I believe, because over a period of time, I still believe, and this is purely my opinion and standard disclaimer apply, that HDFC Life and other private life insurance company will take the market share away from the government ones. And you should better wait for levels of 800, a good 15% correction before investing. So in my opinion, it is an avoid at these levels. Wait for at least a 15% correction. Wait for 800 levels, and I still believe HDFC Life is a better option in comparison. And do not buy a number of life insurance company, because if anything happens to the business of life insurance or this sector altogether because of some government news or anything, then you'll be in trouble. Probably buy one of these and go by your own analysis and just invest into it. So this was my video on HDFC Life and comparing it with SBI Life. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.